you very much for the opportunity this evening to tell you a little bit more about why we're so excited at Seraphim about the opportunity that exists today in space tech investment and will exist over the decades and generations to come. If we are to address some of the world's most pressing challenges, from climate change to ubiquitous connectivity, space is really the only domain that can address those challenges. Space enables us to model, map, and manage whole Earth ecosystems and address applications across all vertical markets. At Seraphim Space, we are the world's leading investment group focused on the opportunity in space. I'm Rob Desborough, and I'm one of the 3 managing partners at Seraphim. I've got 15 years experience in early stage venture capital investment, and I'm joined by my 2 colleagues who have a comparable amount of experience, and we've been working together since 2006. I lead on all the early stage investment activity, and in that capacity, I built and launched the world's first accelerator program focused on supporting early stage space startups. As Seraphim, we are pioneers in this field. We built and launched the world's first private investment fund focused on space in 2016. In 2021, we built and launched the world's first listed fund focused on the opportunity in space, our growth capital fund, Seraphim Space Investment Trust, which launched on the market in an oversubscribed round in July of 21. Our first investment fund is now fully returned. Over a 5-year period, we fully returned all capital, generating a 49% internal rate of return. That is one of the best performing funds of any type for that vintage. What is our playbook? Well, what we looked to do when we first established the fund is to build a platform that identified and worked with all the key stakeholders within the ecosystem, from some of the world's leading space entrepreneurs who've been there and already built billion-dollar companies, through to the leading space agencies and also corporate partners as well. We've had long-term relationships with the like of European Space Agency and the UK Space Agency and NASA. We're invested into by some of Europe's leading and the US's leading corporate space organizations, the likes of MDA, Airbus, SES. And we can leverage their due diligence, their networks, and their expertise. We're joined on the advisory board by the former CEO, Director General of the European Space Agency, and Sir Marston Sweeting, who was really the godfather of the small satellite industry in the UK. This gives us an unfair advantage in the marketplace. This helps us really identify the winners, and also we are now seeing 75% of the global deal flow pre-IPO in space tech. And we are now established as the most prolific space tech investment firm globally. We can support space entrepreneurs from inception with our accelerator, working with spin-outs coming from universities, all the way through our venture fund, supporting later stage Series A and B and beyond businesses through our venture fund, all the way to growth stage businesses with our investment trust. The accelerator essentially is a feeder. It provides a fire hose of qualified opportunities with entrepreneurs we've got to know, businesses we really get to understand. It provides those opportunities and optionality on investing those companies into our later stage funds. It means that we can write big checks with real conviction at Series B, C, pre-IPO, because we understand these businesses and we've worked with these entrepreneurs for multiple years. So why did we set up a space fund in 2015? Well, there were multiple drivers, but one of the things which really brought it to life for us was that some of the world's leading entrepreneurs were actively and heavily investing into space. Elon Musk has been catalytic in terms of where the space industry today. Elon Musk formerly built and sold PayPal, and he also, as you probably know, is the CEO and chair of Tesla. Closer to home, Richard Branson has built 3 multi-billion-dollar space companies across tourism, transport, and also telecommunications. The founder of Microsoft, Paul Allen, is also deeply involved with his own space tech company. And more recently, Jeff Bezos has been investing upwards of $1 billion of his personal capital every year into Blue Origin, his launch company. And we've been seeing significant and growing appetite from big tech as well. Amazon have been in space for some time now, building ground station infrastructure. They've also now announced they're a mega constellation company. Google have been involved in looking at space for multiple years, as has Facebook. And some of you may have picked up recently that Apple is now utilizing satellites to provide emergency connectivity directly to their iPhone. But what's really driving this, and what really drove our push to move into space, well, it's this paradigm shift in space economics, which is creating a very large-scale investable opportunity, and it makes it right for equity investors like ourselves to be backing private companies. The two key things are the change of the cost of launch and the change in the cost of the satellites themselves. If we go back to the 1980s and the Space Shuttle program, it was costing us circa $80,000 per kilo to get assets into space. With SpaceX and particularly Falcon Heavy, which came on stream in 2020, that's now dropping to $1,000 per kilo. And NASA have ambitions to drive that cost down to tens of dollars per kilo by 2040. In terms of satellites, we are no longer reliant on satellites the size of buses, costing tens of years to actually build and get into orbit, and billions of dollars. We are now investing into satellites that can sit in the palm of your hand, which are using off-the-shelf components which you'll find within the laptop you're utilizing today or your mobile phone. And why is all of this relevant? Because by reducing the cost of access to space by a factor of 100, it's bringing new private players into space. And those private players can produce constellations of satellites that can revisit the same place on Earth multiple times a day, providing near real-time insight. Enormous and unique global data sets that can impact climate change, connectivity, mobility, smart cities, and IoT. We're building a digital infrastructure in space. And that infrastructure is now at a key inflection point. Only 13,000 satellites have ever been launched, and 4,500 are operational today. And circa 80% of those were launched in the last 3 years alone by only a handful of operators, some of which we've invested into. And that handful of companies is already scheduled to put a further tens of thousands of satellites into orbit. We're also engaged with 200 companies that are planning to put up in excess of 100,000 satellites over the next decade. And they will build some of the world's biggest businesses, addressing some of our biggest challenges. So this is an industry that's genuinely at a point of inflection. Ultimately, the businesses that we're backing are collecting and communicating data from above. And they're addressing problems across multiple verticals. Space is a horizontal. It's more akin to the internet or software. And the data we're providing is a tsunami that will impact every sector, while also generating billion-dollar greenfield opportunities. Space data is already having an impact today on agriculture, optimizing crop yield, on insurance, parametric insurance, bringing new products and services to market. It's having an impact on finance, on optimizing logistics, on telecommunications, and over time, data centers, government, natural resources, energy. All of these industries will be disrupted by the impact of space. This is a multi-decade growth opportunity. We are very much just at the start of it. Currently, the space sector revenues are circa $360 billion a year. But this is growing to trillions in revenue per annum by 2030. Today, we're mainly focused on looking at ubiquitous communications, on looking at the use of Earth observation data to address many terrestrial issues, and we're looking at the commercial adoption of that real-time data. As we move forwards to 2025, we're looking at governments being increasingly reliant on the commercial data, not their own governmental data. Falling cost of launch will open up many more business cases as well. And as we build this infrastructure in space, we're now looking at how we can optimize that infrastructure, how we can service it, and importantly, do active debris removal as well. Further afield, science fiction is already turning into science fact. We're engaging with companies who are looking at building solar farms in space. It's a far more efficient place to generate energy than down on Earth. We're looking at data centers moving to space as well. We're looking at, if this is akin to the railroads, how do we build that service economy around the infrastructure? By 2027, we'll start to see the first independent private space stations in orbit. Microgravity is an incredibly exciting environment to look at life pharma, drug discovery, to look at materials discovery, manufacturing as well. And we're starting to see investment going into the cislunar, the moon economy as well, and deep space exploration. So this is very much a multi-generational opportunity. And the transformation we've seen in terms of the economics is what is driving private investment into this area. When we launched Seraphim Space in 2016, $1.5 billion was being invested globally. In the last 12 months to June, 13 billion was invested by private investors into pre-IPO companies. In the last 18 months alone, we've seen more capital being invested into space companies globally than the previous 5 years. So I think we can all agree this genuinely is a point of inflection in terms of capital being invested and the number of satellites that are being put into orbit. And we're seeing a flourishing global ecosystem as well. We're seeing thousands of startups globally. I've already said we're seeing 75% of all global deal flow. Well, we've met and engaged with nearly 7,000 space startups globally. And we're seeing this excitement and activity across the full value chain, from companies looking at doing launch, building remote sensing capabilities, building satellites themselves, building constellations, building the downlink capability, and building the analytics and the end products that will serve that end vertical market application. But we're also seeing opportunities beyond Earth as well, space exploration, space resourcing, and space infrastructure as well. This is an incredibly exciting time to be part of space. There are many key drivers that underpin the space opportunity, but really there's 4 that are reshaping our world for the better today. And notwithstanding the current macroeconomic situation within our own portfolio, it's these drivers that are really underpinning the activity and demand for the services we're seeing with our companies. I think we could all agree that we're looking to create a more secure world, both from a security defensibility perspective, but also from a resource perspective as well, and better managing our food security. Space is also uniquely positioned to help us measure and also mitigate against climate change in the future. Space has a genuine capability to drive towards net zero. And space has a key role to play in sustainability. And the United Nations have recognized space's role in sustainability, and space maps across all 17 of United Nations Sustainable Developmental Goals. On a portfolio basis, every single one of our investments maps to at least one of the 17 SDGs. Now, let me bring to life a little bit about what some of our portfolio companies are doing. ICEYE is one of Europe's leading space technology startups. This company has raised a couple of $100 million. And what they're doing is seeing the unseen. Typically, we are reliant on optical satellites to understand what is going on the Earth. But at any given time, an optical satellite cannot see 65% of what's happening because it's dark, or you've got cloud cover, or other weather events. ICEYE's radar constellation can see at night and through any weather condition on a multiple time period during the day. This enables ICEYE to do change detection, change mapping, change monitoring. So we can better manage catastrophic weather events and the outputs from those weather events and how we manage them. But equally, and this is particularly relevant and pertinent to what's happening in the situation in Eastern Europe at the moment, we can map and manage what's happening from a defense and intelligence capability. And I'm sure it wouldn't surprise you that companies like ICEYE and others in our portfolio are very actively engaged in the current situation there at the moment. Spire is predicting the weather and optimizing logistics. Spire has built a constellation of 100 satellites. Their weather data provides a better 5-day weather forecast than any government's 3-day weather forecast. They are able to track any plane and any ship globally at the moment. This is a company that launched or listed on the New York Stock Exchange last year for in excess of $1 billion, and there has been significant pricing pressure on it to date. However, this is a company that is doing 100% year-on-year revenue growth, is already exceeding, will exceed 100 million ARR this year, and is at the moment only listed at 1 times its revenue. So there's significant value within companies like this that are listed in the US market. Closer to home, we're the lead investor in a UK satellite company called Satellite View. Satellite View is unique in that it is building the world's first space thermometer. They are going to provide thermal footprinting at a building level for all buildings on Earth. So we will understand how efficient those buildings are, but it also provides critical economic data. A thermal footprint can tell you how well the iPhone factory is performing, how many shifts are they performing at, how many iPhones are they likely to produce. Also, all vehicles have a unique thermal footprint as well, so there are considerable defense and intelligence applications for satellite view there. Finally, Ast Space Mobile, another company we listed on the Nasdaq last year. Ast are uniquely positioned to provide global 5G connectivity to anywhere on Earth, directly to a user's mobile phone, without any additional hardware or change of software. This is one of the most exciting areas of space at the moment, and it's an area we're seeing a lot of excitement from big tech, which is moving into this marketplace. Ast has first mover advantage and already has its satellites in space at the moment, their first one. So thank you very much, and I hope that brought to life why we think space is such an exciting area to invest into at the moment.
Thanks, Rob. Excellent presentation. Thank you very much indeed for that. I'll go straight into the questions for you. Do you think you are, someone said, 5 to 10 years slightly early to the market as other funds in this sector are down?
So, no, I do not believe we are. No. As you would expect me to say, I think, our first retirement fund returned 49% IRR, and that was because we were ahead of the market and we were pioneers. That enabled us to go in early into the early seed stage and Series A rounds of these private sector companies at a pre-revenue stage, build relationships with them. And if we look at some of the IPOs we've had over the last couple of years, the oldest has been 8 years and the other 2 have been 3.5 years old. So I think what we're seeing and what hopefully my presentation evidenced is that we're at a massive point of inflection right now, but we are definitively the global leader in this space. So no, I think we've got our timing quite right. And we're starting to now see other funds come into the marketplace but we are the established leader and we are the go-to investor. And that means some of the world's biggest traditional venture capital funds come to us because they want a space specialist on the cap table.
Okay. Now, obviously, from a observation perspective, everyone thinks about the US as the big space frontier, knowledge, and everything else. So, the amount of companies that you engage with, are they predominantly US?
Yes, they are. We are very much a global investment fund. By volume, probably a third of our investments are US, third mainland Europe, rest of the world. We've invested into India and Japan as well, and a third UK. By value, 50% or more are US companies today. In terms of global activity, the US is still very much the leader. China, when it comes to small satellites, is probably second. And then the UK is playing quite a strong role and coming in at third at the moment. So the UK is playing a significant role here and is determined to get a 10% market share.
Okay, good. And do you feel that it warrants a listing in the US on the Nasdaq?
I think a US listing would certainly be an interesting opportunity for us as an organization to consider. I think there is significant capital in the US market that we're now seeing that's looking to access space. I think what is difficult for capital at the moment is there aren't very many avenues for you to access space. It's still very much in the private sector domain, so you've got to access those companies. There is regular trading in SpaceX on the secondaries market, but there aren't many avenues for the public audience to access space. And we provide one of them. I think by looking at the Nasdaq market, we could open it up to US investors as well.
Okay. Apart from the current turmoil we're experiencing, where do you see the biggest risks and how are you addressing them?
I think as the leading investor in this space, we have to be a fantastic custodian for the space domain as well. So we need to make sure it's incredibly well managed so it becomes a sustainable environment and ultimately does become that multi-trillion-dollar industry. So we need to make sure we've got the right regulatory structure, the right legal framework, the right insurance framework to manage that ecosystem. And ultimately, we need to make sure that we can remove space debris and manage that environment as well. So we're active investors, not just in putting the constellations up there, we're active investors into on-orbit servicing. So we're the first Western investor into the world's pioneering space debris collection company, which is Astroscale, Japanese startup. We've invested with significant investors into companies that are measuring space debris both from the ground and also in space as well. I think we will be moving towards the legal framework for space hasn't really been addressed since '67 and the liabilities since '72, so we will see more work around that. And I think ultimately this is an exciting area for financial services to build more financial products around this, and particularly the insurance area to play a role. So I think it's ultimately there are challenges like there is with any new market, but I think there's enough drivers and there's enough opportunities to build multi-billion-dollar global scale businesses, but this is a long-term multi-generational opportunity.
Absolutely, yeah. Okay, well, I think we've just hit time limit there, Rob. I appreciate your presentation this evening, and obviously we can let people know that we'll send the slide decks onto them with your permission.